part of the thing that happens when you browse a website like OpenSea is that there's actually a feeling of freshness, right? And the feeling of freshness is this is what it looks like when people don't tell you what you want to hear, right? They don't, the power, the centralized power isn't forcing you to buy anything. People are just buying whatever they want, right? And the rawness and the freshness of it is really what makes it revolutionary, right? So
Hello everyone, welcome to yet another exciting episode of NEWFORUM. We are always thrilled to bring you awesome creators, founders, visionaries, and investors on the podcast. NEWFORUM is powered by New Foundation, and it's our aim to spark informative and educative conversations on the topics of DAOs, crypto, NFTs, startups, and metaverse.
And on today's episode, we are super excited to have with us Miko Matsumura. Miko is a general partner at Gumi Cryptos Capital, a Silicon Valley investment fund, including early-stage investment in unicorns such as OpenSea, Yield Guild Games, VEGA Protocol, and he has over 25 years of experience in software and investing. And we are super excited to talk with him today about Web3 investing and where he sees the biggest potential in the space right now. Hey, Miko, we're happy to have you on today.
Okay, it's great to be here.
Yeah, to start things off, Miko, I saw your tweet where you talked about that you bought an Earl Grey tea 9 years ago with Bitcoin. So my first question is how you got in the space quite early, and how did you find your way into crypto and Web3 investing?
Yeah, I mean, it's pretty funny to think about. So, the Coupa Cafe in Palo Alto had a Bitcoin checkout. I made it my goal to actually mine enough Bitcoin to buy a cup of tea. So it's pretty amusing. And, this is something that I did post recently on my social media, which is this photo of this Bitcoin checkout at my local tea house. So, that was a lot of fun. But the person who really got me into it was someone who I worked with in open source software, Talib Ozturk, who's a CTO and creator of this in-memory database called Hazelcast. So he really, when he first saw Bitcoin, he implemented the protocol, from scratch, and he really deeply understood the protocol. So, I think he really encouraged me to take a look at it. And I think it's super helpful to have, really deep people around who can, help you understand, the implications of emerging technology.
That's great. We are also wondering about your Gumi Cryptos Capital Fund. You already have a few unicorns. If I'm not mistaken, it was 8 or 9. Is that right?
Yeah. And, we definitely are, actively working on the next one. So, we certainly expect to have quite a few more.
That sounds fantastic. So I wonder if you could give some advice for our startups or projects that are considering an investment. So what would be the top 3 things you would be looking for in the founder?
Yeah, absolutely. Absolutely. So, I do think that the top 3 things are, team, and team, so we're very team focused. We're very much looking at the kind of, team qualifications, founder market fit. But I think one of the deepest ingredients is conviction, right? What we know is that, we really see this potential for 0 to 1 innovation. So really, really significant innovation. Sometimes it's 1 to 2 or 2 to 3, or, sometimes it's not 0 to 1 innovation, but regardless, super ambitious world changing projects require ultra high conviction, and in a sense, the entrepreneur's conviction has to be sort of demonstrably great. It has to be greater than that of the investor, because an investor is an investor as a function of diversification, right? Because if an investor said, I don't care about anything except this one project, and all of my energy in life is going into this one project, and I'm going to abandon all other projects, which I deem to be a waste of time, that's not an investor anymore, that's an entrepreneur, right? So like, so the entrepreneur's conviction has to be like that. It has to be, an entrepreneur has to be like, this is my project idea, and any other activities that I would pursue other than this idea would be a waste of my time, because this idea is the most important idea possible, like for whatever reason, right? And to me, like, it's fine if it isn't the most important idea for the whole universe. It could just be the most important idea for this specific person, but it has to be the most significant idea, and they have to really believe kind of in this idea and in the future of their idea, right? Because if without that conviction, it just, nothing else can really work.
Wow, that sounds super powerful and good advice. I'm wondering, when you first stumbled across OpenSea, what made you so convicted in OpenSea? And it's always a risk, of course, for an investor to take. But now looking that all of our community members are also maybe using OpenSea, so I'm wondering, like, what did you thought in the first place of OpenSea and the potential of kind of NFT market?
Yes, we took a circuitous route getting there, actually, right? Which is, my partner is actually the founder of a game company called Gumi. And his game company actually was the publisher of an early blockchain game called My Crypto Heroes. And the idea behind My Crypto Heroes was, what if CryptoKitties was more like a real game, where you have adventure and you have combat and you have, like, real traditional gaming ideas, right? Instead of just collectible, right? So this is a great idea, but it was very early. It was super early, right? So in a sense, it was kind of hard to get lots of players, but they did sell many millions of dollars worth of Ethereum based NFTs. But the thing that became a source of conviction really was not about the specific game title, but really about sort of the emergence of a future NFT marketplace, specifically from the gaming direction. So one of the decision-making processes for us was whether the asset store was going to end up as an app store or end up as a digital asset store. So that was kind of one of the tough decisions that we had to make, because if you look at the history of something like the Apple App Store, right? The App Store in that case started out as a digital asset store, which was music. So it was a music store, right? And then it eventually became an app store because of the evolution of the space, right? So if you think about Web3, there's really DApps, right? So DApps are, become kind of like a possible way of organizing the space. And so do you want to search for the apps, or do you want to search for the assets themselves? Like, which is more important? So at the time, we were actually evaluating DappRadar, which was sort of a DApps kind of search and navigation capability. And we actually came to the opposite conclusion, which is, unlike the kind of Web 2, we felt that the asset was actually the primary and that the application was the secondary. And we actually decided that DApps was actually the wrong metaphor, because when people say DApps, they think apps. Right. And the concept of a DApp is basically like, oh, well, what is a DApp? Right. So if you think about a DApp, like if you think about it from a gaming perspective, right? If you think about it from a gaming perspective, there really aren't any DApps, right? A gaming perspective is you have a game, and the game isn't a DApp. The game is an app. So you're playing an app, right? And then it's an app that actually calls a smart contract, which is on chain. So all you have is you have apps that call smart contracts. So really, what's the app store for apps? Like, there's already an app store for apps, right? So the idea that there's an app store for DApps is kind of weird, because if your game is an app, then it has an app store and we're done, right? So the whole idea of, okay, so the main thing people will search for will be DApps, was something we discounted. We said, okay, that's not the future. So then the thing that happened is that we felt that there would be a future single place where people went to buy NFTs, right? So the thing we had to satisfy with is thinking about, okay, so if there is a future of that state, right? Because when we think about things like markets, we think about winner take all markets. So winner take all market is one in which the market wants there to be a winner, right? So does the market want there to be a one-stop place where you can buy any NFT? Like, yes, the market wants that. Like, users want that, like that. So then we had to figure out, okay, is this the winner? right? So we had to figure out, okay, is OpenSea the winner, right? So once we kind of started in on that road, then we really became convinced of it. One of the hallmarks of them was that they had this burning passion to work with every single NFT project in the world, right? And of course, at the time, that was a pretty small community, but they still were like actively calling and actively emailing and actively reaching out to every single NFT project in the world at the time. And that's very encouraging. Like that kind of behavior is the behavior that creates the network effect of the ultimate winner. So for us, we got a lot of conviction around that, and so we, approached them for giving them writing them a check.
How important is the network effect for you? Like if you look at projects.
Yeah. So, to me, the network effects enable kind of hyper growth. They can also contribute to like a moat. I think to me, the thing that becomes interesting is reasoning in addition to a network effect. There's also the idea of a market that desires fragmentation versus a market that does not desire fragmentation, right? So for example, if you look at something like layer ones is a market that desires fragmentation, right? Simply because if you create a low price token and a new layer one, maybe it's EVM compatible, right? Then the incentives are that people would just copy their EVM applications onto your chain, and then your chain value would increase and you would basically make money. But it's really mostly copying applications and money printing, right? So if you think about L1s, like there's a huge incentive for people to fragment the market, right? So one of the things that we think is very important is not only there be a network effect, but there be a market whose end structure doesn't promote fragmentation, right? Because in a sense, like if you look at OpenSea, the market structure is one where you want one big winner, like you want a winner, as opposed to something like, if you look at things like layer ones or layer twos or DeFi, there's a very strong incentive just to kind of copy and print money. So I think with this kind of incentive, it doesn't produce sort of venture class outcomes.
Yeah, that is true. It's really about the value that the companies are generating and not really the coins that they produce. That is the number one rule. So we know that you are very interested in DeFi, and obviously there are quite a few projects in the fund that you invested already. But one of the really burning questions for us is, what do you see right now in the market that is really like up and coming great projects for investment? In which areas are they?
Yeah, so I really like insurance. I think insurance is a very exciting area. We think that decentralizing kind of actuarial function pretty valuable. We do think that security insurance, I think, is valuable. So we think that the DeFi insurance area is valuable. We think that options are a form of insurance. They're basically price insurance, Oracle dependent. But we think options are pretty interesting. Broadly, we think that the total derivatives market will actually be smaller than the proportional size of the derivatives in the sort of traditional finance segment because of the lack of sort of fundamental and sophisticated risk analysis, right? So I think that crypto tends to not have fundamentals in many cases. So I think because of that, you can't do as many of these types of arbitrage of these risk parameters, right? So we think derivatives is like possibly a little overdone, although, we're obviously big early backers of VEGA Protocol, which is of course derivatives. And, so we certainly have excitement about the general space. We have Delta Exchange, which is a more another derivatives product. So, we like derivatives, but we think the big ones are options, and kind of leverage are kind of the big products there. I would say, within the DeFi space, there's a lot of kind of change coming. Like one of the areas that's quite interesting is like identity and KYC, given things like the Tornado Cash regulation. So we definitely see opportunities for identity infrastructure, and obviously identity infrastructure that has sort of a privacy basis, but is not impenetrably private, right? So, we think that there is an existential agenda by the regulator. So we think that, there's sort of a faction on the internet that is about kind of privacy as an absolute human right. And I think it's difficult. It's difficult to preserve that position because, if you look at something like the United States Constitution, it protects against unreasonable searches and seizures. But that's the extent of the provision afforded by the Bill of Rights in the U.S. Constitution, right? So it's not an absolute guarantee of privacy in every possible case. So, I think in a pragmatic society, it's hard to do that. It's hard to guarantee privacy for all in a context where people are committing, crime and funding terrorism and doing difficult things. So, so I think there's an opportunity to have a compliant form of privacy where, nobody can breach another one's privacy without kind of lawful due cause, like, search warrants and the appropriate types of legal backing.
Interesting. And from your perspective, like the next years of like Web3 and crypto and turning that maybe towards the creative economy, like, do you think there's going to be a really big mass adoption of Web3 tools, for example, that there's going to be interoperability between different apps and all these things? And do you think that, let's say, like the social media Gen Z community, that they're going to adapt to all of these things?
Yeah, I think there's no question in my mind that, when we talk about this idea of Web3, like, we're really fundamentally talking about rebuilding the internet. And I think the thing about rebuilding the internet as a project is that we have to really understand why and the purpose, like, why are we doing this? And I think the first place to look is very obvious, which is I think that the internet has been based on kind of purely, obviously there are subscription services like SaaS that are on the internet, but I'm going to exclude those for a moment and talk about sort of the public internet. The public internet, the internet that's not fueled by direct payments to providers of applications, is fueled by advertisement. And I think that the concerns about that are basically radical decreases in privacy, and concerns that include things like the promotion of kind of negative content, so I think that social media promotes kind of negative content, and really it promotes kind of like lies that make you angry, so because it sells ads faster and better, right? So in a sense, like, we feel like we've reached the end of the ad-driven segment of the internet, and I think that we need to move towards something that has more privacy, more security, and better incentives, right? So I think we have the potential with the blockchain to create an internet of value. We can actually support, I think, in the future, things like micropayments, where we can actually reward people for positive behaviors instead of rewarding them for negative behaviors, and I think that that's possibly a much better target state, right? So I think that, we have to start with, we are going to rebuild the internet, and what part of the internet will we rebuild? The other part of the internet that needs rebuilding, whether it's pay or advertising, is just the security model. So any one of us can go on the dark web and buy a file that has 8 billion name password pairs in it. So like, if you think about how fundamentally insecure the current internet security model is, it's just bad. It's just really, really dangerously bad. And so I think, given how bad that is, that's something that needs to be fixed. So, I think that's another area that is, irrespective of whether it's paid or whether it's advertising driven, that part of the internet is broken and needs to be fixed.
So our listeners, really, they all come mainly from the creative industries. So I'd like to kind of like go into that direction a bit more and hear your view about what is happening right now with the current recent popularity of DAOs and NFT projects. What do you think is coming in the market? How do you see those projects in general? And if there anything else you would love to see more of?
Yeah. So to me, what I would love to have are creative people sort of trying to reason about the emergence of these technologies in a way that helps them understand the sort of flow of power and the flow of influence, and what is the structure of economics around creation and creativity, right? So for me, like, if you go back into things like art history, one of the fertile areas in art history is the Renaissance, right? And the thing that's so fascinating when you actually study the Renaissance is that what we're in is a period that actually follows the Renaissance, which is that, while the Renaissance was artistically creative, it actually was mostly fueled by an overpowerful centralized entity, which was the Catholic Church. So if you go back to these kind of folks like Leonardo and Michelangelo and Donatello and all the Ninja Turtles, like those are all hired by the Catholic Church to, effectively extend the brand and power of the church, right? So, this was interesting, and I think when you think about things like what the church was able to do, the technology that arose in that era that became probably the biggest disruptor was the press that was created by Gutenberg, right? So Gutenberg created kind of the fixed press for printing, and one of the most popular books to print was actually the Bible. So as soon as the Bible got translated into commoner languages and got into the hands of commoners, this actually triggered the Protestant Reformation by Martin Luther, right? So this is decentralization, this is democratization, and this is like, so in a sense, the control of power moved away from central control, and that people were able to have an experience that was not mediated by the church, right? So the idea becomes that the experience of divinity was basically controlled by the church. And if you wanted to see a beautiful art or beautiful painting or beautiful music or see a beautiful building, the only place where you could do that is by going to the Catholic Church. And so they kind of cornered the market on creativity and on beauty, right? And that was it. But the thing that happened after the Protestant Reformation was that people realized that beauty could be owned in a more decentralized pattern, and that access to divinity could be owned by an individual, right? So that became a sovereignty pattern, right? So the thing that I think is really interesting is that when you think about something like NFT, like one of the patterns we're seeing is around something like degeneracy, right? So like when you look at like Bored Apes, or you look at these things, they're all kind of this reactionary, degenerate state. And the reason why degeneracy is so strong is because, in a way, like the desire for the upcoming generation to own assets is kind of that, in a way, the boomers have owned all physical assets, right? So in a sense, they want to own something that's a digital asset, but not only do they want to own something that's digital, but they want to own something that the older generation wouldn't even recognize. They don't even know what it is, and if they saw it, they would recoil in horror, right? They would reject it, right? And so in a way, this reactionary degeneracy is, I think, an adolescent or intermediary state. But part of the thing that happens when you browse a website like OpenSea is that there's actually a feeling of freshness, right? And the feeling of freshness is this is what it looks like when people don't tell you what you want to hear, right? They don't, the power, the centralized power isn't forcing you to buy anything. People are just buying whatever they want, right? And the rawness and the freshness of it is really what makes it revolutionary, right? So another example that I would provide from a creator perspective is there was really the rise of alternative rock music, really in the form of Nirvana. So Nirvana was marked the first time that alternative music outsold popular music. So there was a concept called popular and a concept called alternative, but the alternative was selling more than the popular. So how is it that the popular was even popular, right? So that whole concept was really kind of disrupted by Nirvana. And I think the reason why it was disrupted is that the record industry had gotten too centralized, and they started creating fake bands like Milli Vanilli, and they started sort of forcing their crap down onto the users. And finally, like, there was a band, and when people heard Nirvana, they were like, they just didn't even know what they were hearing. They were like, what is this? Is so raw, it's so fresh, like it's actually like humans having feelings, and expressing their feelings, so it was just insanely fresh, right? So in a way, like, I think we should reason about the wave of creator economy, the ability for the internet to disintermediate channels, right? To basically allow artists to directly approach audiences, as being an increase in the margin, right? Because ultimately these channels have long been the kind of extractors of value and the extractors of margin. And in a sense, the creators are the ones who can actually get the most margin out of this new revolutionary technology.
This is like such a great comparison. You can just see how history repeats itself, but we want to make it better. We're trying to make it better. And also, I love the fact that you mentioned this kind of our generation has a different art market. We grow up in a different world and we kind of look for identity, and our identity is kind of digital. So in the future, we might find ledgers or things like a Michelangelo might be an NFT project that you find, or it's just a different type of expression. And I also see a lot of musicians from the creative world that are now forming DAOs and really trying to make a difference within the space. So I really thank you for pointing that out. I think this is really great insights for the community.
Yeah, I mean, I think the thing that's important is that this technology is fundamentally a technology of disintermediation, and it's the removal of basically non-value adding intermediaries, and you're replacing the intermediaries with internet protocols, right? So the idea of Bitcoin was you don't need a bank anymore, right? You just have an internet protocol and everybody just basically agrees to the protocol, and then the internet just operates, it just functions, right? So the idea of taking all of these heavy intermediaries that are, what are called rent-seeking intermediaries that are just trying to suck money out of the middle, right? You get rid of all the middlemen or middle women or whoever's in the middle, and then you probably mostly men, and then you get the profit extractors out, and you basically allow creators to have much more control over their assets. The other thing that I think is so interesting about NFT is based on the blockchain ledger, and the blockchain ledger is basically an agreement about ownership, right? So the agreement about ownership is important. And the reason why it's important is that what if there was an internet that respected intellectual property rights? Right. And so if you think about the NFT internet and why it's sort of started getting excitement from creators, is because in the history of the internet, the history of the internet is the history of copying people's work, right? So in a sense, artists have always had their work commoditized, copied, and in a sense, the thing that happens with NFT is that at least now you have a blockchain-based ledger. The ledger certifies authenticity, and in that case, honors and protects creators and their intellectual properties. So I think that's the kind of reason, one of the reasons why so many artists and creators have started to embrace the technology, because they're sort of tired of being extracted on. Obviously the other thing that's really important as you replace an institution with an intermediary is that artists have kind of long been sort of cheated by sort of distribution partners, right? So if you look at something like the music industry or the movie industry, Peter Jackson, the creator of the Lord of the Rings movies, actually had to sue in order to get his fair wages, in the fair distribution that was even written in a contract, right? So what happens is that movie distribution companies, they sign contracts without the intention to even correctly pay, right? So that it's shocking that that's a standard practice, is to not pay, which is it's amazing. And obviously I think he was successful, but if you imagine that, you have to imagine that they're really screwing over people who are less famous, whose movies maybe are less profitable. And I'm sure this story has been told thousands of times to every creator and artist, right? And whereas the thing that's amazing about a blockchain ledger is a blockchain ledger keeps an accurate track of who paid for what, right? So, so for example, if you have an agreed upon split, you can just look on the blockchain. So if you're selling an NFT, then you can know exactly how many of them you sold. You can know exactly how much each person paid, and you can know exactly how much you're due based on the splits that you agreed on, right? Now, it's still a wild west, right? So you can have an agency that helped you make your NFT, and the agency doesn't know how to write smart contracts, and the agency hired some developer in some really crazy remote part of the world, and then that crazy developer rug pulled everyone, so it's not a utopia yet. So I don't want to pretend it's a utopia, but the technology is beneficial, right? So if you use the technology correctly and you don't get rug pulled by some developer in some crazy part of the world that, you know, rug pulls everyone, you know, that then, you know, you're getting the benefits, right? Because you can actually look in the blockchain and you can see exactly how many copies you sold, right? Whereas the thing that's creepy about the history of representation in art is that a lot of record labels, a lot of movie companies, a lot of agencies, they just cheat artists. They just say, oh, you know what, you didn't sell that many albums, sorry, right? Like, you know, they just tell you, they're like, you sold 8 copies this month, you know, and maybe you sold 800,000 copies, right? I mean, that would be a bit too fraudulent, but like, you know, but they definitely shave like the numbers, right? Whereas if you're on a blockchain, you can just visit the address and you can see exactly what happened and nobody can cheat you. So that's the dream. And obviously, like, you know, if you're being rug pulled by some developer in some remote part of the world, you know, like that still can happen. So like, you know, it's, I don't want to say that like everyone's going to have a perfect experience of the technology.
Definitely not now because it's so early days, but we really would love to see in the future, you know, when hopefully our grandchildren will say, oh my God, how was it like back then? It's impossible that some big platform actually owned all these rights or earned so much money out of amazing artists, you know, so it's, yeah, we hope that it will happen for sure.
Yeah, I think if you look at the per play royalties on music platforms like Spotify, like it is jaw dropping. Like it is so shocking. And the other thing that's pretty shocking too is kind of the winner take all element of it. Like if you think about like, so you can ask logical questions like, what percentage of total music played on Spotify is Drake, right? And that kind of a question actually is a sensible question to ask. It's like a sizable percentage of like all music that's ever played, right? So it's amazing, right? So when you put those two things together, like, you know, people who aren't Drake are like, it's like, how are they even putting a roof over their heads? Like the math doesn't work. It's really shocking.
Yes, exactly. Well, it's such an interesting conversation about creators. But actually, I would love to kind of dive a little bit more into business because there is quite a big amount of investors, hopefully, that are going to listen to us. So could you give them a little bit of advice on how to find unicorns and where to find them?
Yeah, absolutely. I mean, to me, like, you know, business has always been about humans and about networks, right? So in a sense, like, you know, a lot of referrals are pretty important. You know, like a hot tip from my side is if you have a way to get a warm introduction to a venture capital person, you know, it's gonna be 100 times easier for you than just cold connecting to them. I mean, if you don't have a way of getting a warm introduction, then that's fine. And, you know, we definitely do evaluate all of the outreach, cold or otherwise, right? But like, in a sense, like, you know, my advice is really, you know, if you have the ability to get a warm intro, it helps everyone, right? So in terms of like, where do we look? You know, obviously we have all the standard things. We look at all the incubators and accelerators. We look at all the kind of top universities, like, you know, we look at all the normal places, you know, but I think that, you know, for us, probably the most valuable source of business opportunity are, you know, our friends and our, you know, in portfolio entrepreneurs, CEOs, and, you know, other angel investors, venture funds, you know, so we continue to rely on our network. And, you know, one of the things that always helps is when we develop kind of relationships. You know, I think that curation is big, right? So in a sense, like, you know, what we like is to develop a relationship over time because the parties that we co-invest with kind of learn a little bit about our taste. You know, usually what creates a very stable business relationship is one where we kind of have potentially similar tastes. We like the same kinds of things, you know, so we work together very carefully with, you know, specific parties because we kind of have a shared mindset and we're excited about similar things, right? So I think, you know, that's something that comes out over time. You know, if you kind of express interest in something but not interest in something else, you know, ideally over time, you know, the people who you work with will start to learn your preferences and, you know, send things that are more a better fit over time. Sometimes people approach our fund, you know, and they kind of tell us things like, oh, well, we've already gotten this many millions from these other VCs, and I think what they don't understand is that's bad. Like, to us, that's bad, right? Because we're an early stage fund. So the fact that they've raised from other people before us is kind of makes it even harder for us to do business with them, right? So in a sense, like, they may be proud of that, but like, in a sense, like, we, our what our economics depend on is that we're earlier than, a lot of our upstream partners.
So in a sense, if you kind of see like all these partnerships already, do you have like concerns? Like that's like kind of the mindset that they already raised a lot of funds and that.
I mean, one thing that's a bit of a tell in some cases too, and this is much more popular in like Europe than it is in the US, is that sometimes the team slide is like, look at how huge our team is. We have 40 people and like we're already a big, impressive company. Like, big turnoff, right? Because like for us, we're like, that means a really huge burn rate, and it means that our average check size becomes less and less meaningful, So like, in a sense, like, we don't mind if it's just like two people on a slide, or we don't mind if it's a very small looking team, and if it's a gigantic looking team, like, we just see a higher burn rate, and we see kind of like, it just makes us potentially more concerned that it might be a late stage company that, because we're an early stage VC. So like, in a sense, like, that's another thing, so if someone is like, oh, we've raised tons of money and we have a huge team, like, that's great. Like, I'm glad that your business seems to be doing well, but like, it doesn't make for a good investment by us. Like, we're much more kind of two people and a dog, so wow. But different firms are quite different, but we do tend to go early. Like, that's just our tendency, and we lead more than we follow. So like, if someone says, oh, this other impressive person is investing, like, it's kind of neither here nor there to us. Like, we're not like, oh, well, if they're doing it, then we have to do it. Like, we make our own decisions.
That's so interesting. I think that's great advice. And I'm also wondering, you reacted a bit on LinkedIn to the gaming industry, and it was kind of like a thread where it says like gaming was failing unless they audit the economies. And I'm wondering, where do you see like the gaming space going, and what made you interested in gaming, and why do you think it's not failing?
Yeah, so I definitely responded because I think it's sort of an economy auditing firm talking about how you're going to fail if you don't buy an economy audit. So it felt a little bit too salesy to me, because the reality is that I don't think that it's smart to launch a super complicated economy that requires a complicated audit from day one. I think the correct way to launch a game economy is to set up like a core loop, right? And the core loop should answer two questions, right? And it should answer two questions. And the core loop is super simple answers, right? Which is, what are people buying and why, right? And then how do they get the currency that they're using to buy, right? So what items do they buy with what currency, and how do they get the currency? If you can answer those three questions, you have an economy, right? And if you can answer those questions in a good way, then you have a good economy, right? So so to me, like, people who are kind of trying to from day one make these insanely complex mechanisms, I think are shooting themselves in the foot. So to me, like, if you have a super simple economy that works, right, then you're in a great spot and you don't need an audit, right? Because if it's super simple, it's like, oh, well, people collect coins by doing X, and then other people buy things using the coins, and then the things they buy are used in this way, and so everyone has a really good explanation of why are they doing that? Why are they performing that behavior, right? If you can answer those questions, you have a core loop, right? So I feel like some game auditing firms are going crazy building these super complicated models with little bubbles and arrows going everywhere. And in a sense, like, when you think about Web3, that's just a large attack surface. So if you launch day one with a hugely complicated economy, someone's going to probably cheat you. They're probably going to figure out some cool way to extract money from you, and they're just going to do it, and then you'll be out of luck. So so I feel like, start simple, kind of make iterative changes gradually over time, you may end up with a complex economy, but like it's not a good place to start. So that's why I kind of reacted to this idea of like, if you don't have an economic audit, presumably from the poster's company, then you will fail. Like, I think that's just fear tactics, and I don't think it's necessary.
I have a tiny little add-on to that because I feel like it fits in right well. So why do you think, how important is product market fit and like kind of being close to your, I don't want to say user or customer, but I want to say maybe community, or how do you see that relationship?
Yeah, so that juncture is a binary juncture. It's so distinct, which is in startups, there's sort of pre-product market fit and post-product market fit, right? And in a sense, like when I say that it's binary, there's sort of there's a gray-ish area, right? So for example, you could be generating revenue, you can be acquiring users, and you could still be kind of pre-product market fit in the sense that you may have evidence for something, but you're not sure what the something is, right? So in a sense, like, for us, we like to delineate and say that there are pre and post product market fit companies, and that the early stage investing is principally about being pre, right? It's principally about taking the risk of product market fit. And to us, then at that point, what you have to do is analyze companies differently. So if you're analyzing a pre-product market fit company, you really have to get conviction on the founders, and you have to have correct founders, right? So I think the idea of being close to customers, users, and community is definitely super important. But when you look at founders, the thing that I think is the most telling kind of detail about that is whether the pre-product market fit firm has a product person. Now, in some sense, it doesn't matter what the title of the person is. The title of the person could be game designer, it could be CEO, it could be CEO founder, it could be co-founder, it could be, it could be anything, right? Their title could be anything. But the question that I would ask is, do they have a product person, right? Like, and a product person is a very distinct thing, right? So even if the person's title is CEO founder, if that CEO founder is a product person, that's great, right? So typically what we look for is a product person and a tech person, right? So, in a pre-product market fit organization, those are the things we look for. There are definitely pre-product market fit organizations that are like, oh, it's a business person with no tech persons, or it's 3 business persons, right? Like, that's not awesome. Like, that's unnerving, right? Because we want to see builders build, and we want to see builders build things that users want to use. So to me, like, the product person will kind of make sure, so the tech person will make sure that things are being built really quickly, and the product person will make sure that the things that are being built are things that users want to use, right? So that pairing is an awesome pairing. So if you go back into the history of like technology, it's a cliche, but like, like Steve Wozniak was super builder, and then Steve Jobs was kind of a super product person. You could say that Steve Jobs was just sales, but like, he's definitely a product person, right? Like, he's definitely a person who cared about the product and cared about what the product looked like and what it felt like and what users would experience, right? So I think the product person and technical person together is super good for pre-product market fit companies.
Absolutely. So that is amazing that you're saying that, because I was always as well for Web2. So you would say Web3 is very similar as well. Like, it doesn't really.
I mean, I think that the business and personnel dynamics are similar for sure.
Yeah, absolutely. So yeah, so my last question was also around investments, and for our Web2 investors who are looking into the space, because there are actually quite a lot of VCs and angels who would love to now invest also in blockchain and metaverse. Would you give them some advice?
I think this, right, which is that one of the thesis points around sort of like bringing Web2 investors into Web3 is not bad. And the reason why it's not bad is that everyone says we're in early days, but it feels like there are some mature infrastructures, things like Ethereum and things that kind of perform a higher performance layer 2 function on top of Ethereum that are ready to be used, right? That you can build an app, you can connect it to, some kind of an Ethereum high performance layer 2 and it'll work, right? So we've reached a certain point where the technology infrastructure is kind of more like a commodity. And I think because of that, the harder thing to do is to create applications that users enjoy and want to use and are excited by. All of that kind of stuff is all Web2 stuff, right? Like paying attention to users and making things they want to use is all been done in Web2, right? So in a sense, you could argue that the blockchain side is becoming more of a commodity, and you could argue that the thing that's more of a scarcity is the ability to make users use your app for long periods of time, to be engaged and to be kind of retained over long periods of time, and to be willing to pay to use the app because it's so valuable to them, right? So like those are all Web2 skills, right? So in a sense, if you're a Web2 investor, you should be looking for that type of situation where you just have this tremendous new app that just happens to integrate with a normal commodity blockchain capability like transaction processing, payments, things like NFT, which is increasingly becoming more of a commodity. So like, I think that, it's no longer about like inventing a new blockchain every time you need to build an app, right? So I think we're moving into a kind of the Web3 phase where I think Web2 VCs have lots of exciting things to contribute.
Miko, I want to thank you so much for being part of today's forum. This was like so useful, I think, for the founders and startups and also investors who are right now in the space. And I want to quickly ask you, where can our community find you on your social platforms?
Yeah. So the easy one is my website, which is miko.com, miko.com. You can jump from there onto my LinkedIn, onto my Twitter. You can jump from there to my YouTube channel. So miko.com has it all. You can just kind of scroll and click on things and everything's all stacked up there.
Thank you so much, Miko. That was really, really interesting and really useful. Thank you for your time and for your really insightful information and sharings with us.
Yeah, appreciate it. Thanks so much.